Hello, everyone, and welcome to our first of many episodes of Stop Whining About Real Estate.
Everyone, this is Victoria Andosilla and
Alex Aviles.
with Remax Home Life Realty, and we're here to give you a market update. According to Remax National Housing, it has been reported that on August of 2022, homes have sold for an average of 1% below asking price for the first time in many years. So we haven't seen this in a long time, but it's definitely, the market is definitely experiencing some change.
Yeah, I thought it would be more, honestly. I think that's probably nationally. And I think, in our current market, I think we're looking at like 3 to 5% below, because I know we're seeing offers at 3 to 8% less than what their listed prices.
Yeah,
so
properties are staying on the market for a little longer,
Yeah.
and we see that the prices are going down. So definitely, we're seeing that the market is coming down to a more balanced market.
Yeah,
So
it's been a while, right? How long has it been? What do you think?
well, we've had quite a bit of time, over 10 years, 125 consecutive months of run-up pricing. So it was about time.
Yeah.
It was about time. Yeah, sellers have been making a lot of equity on their properties, so
yeah.
now it's time for buyers. It's turning into a buyer's market now, so which gives buyers more opportunity, more opportunity to negotiate to get a better price, more closing cost.
Right. Yeah, because homes are sitting on the market longer periods of time. We're seeing a lot of price reductions. So like you said, what do you think? Is there room for negotiations or overbidding? What do you think about that?
No. There's a lot of room for negotiation. There's no more overbidding that we have seen, and there's no more of those long lines on the open houses. Yeah, that was crazy. That was really crazy. But we don't see those anymore. There's a lot more space to negotiate. For our buyers.
That's good. Well, the other thing is, like, with the Feds raising the interest rates. They do it. They say they do it to control inflation, which again that's another topic for another time. But buyers, consumers think that the rate hike is tied to their mortgage. Now they're going to get a higher rate. But you know what? That's not true. The rate hike is not necessarily directly linked to mortgage rates, and so buyers, with what they're doing right now, buyers have actually more options for home products. There's a lot of things coming out right now. Banks are taking all these products off their shelves. They're dusting them off, and they're putting them back into what we call the circulation of loans. So we're seeing a lot of these products come back. And then, like I said, with the rate hike, that's mainly just for like the 10-year treasury. So, this is one of the things that people need to understand. It's not going to raise their rates. Rates are just based on different things, not the rate hike. So, and the other thing is that people are now, or actually these banks, these lenders are now bringing back some products that are actually kind of interesting. So, Victoria, what products are they bringing back that haven't been here for a while?
Oh yeah, we haven't seen these in a long time, but now they're back. The 5-1 ARM loan and the 7-1 ARM loan, which these loans have lower interest rates.
Because they're adjustable.
Yeah, they're adjustable. People are not only talking about the 30-year fixed. We also see the interest-only loans, and so these are the things that are out right now.
Yeah, and my opinion on the interest-only loans, those loans is not the negative AM loans of 2005, 2006. These interest-only loans are just what it is. It's interest-only. So a year from now, 2 years from now, you still owe the same balance. Your principal is not going to go up throughout the years like the negative AM used to do. But let's talk about the big white elephant in the room, Victoria. So this product is coming back, or actually is being pushed a lot. What is this product, Victoria? Tell us about it.
Yeah, this new product is the 3-2-1 buy down. This is a great option. This is a great strategy for us to get buyers into their homes. So the way it works is, let's say, for example, a client was qualified for a property at $600,000 at a 6% rate. So the way it works is that, let's say, the first year they're going to be paying a 3%. The second year the rate will go up to 4%. This third year it will go up to 5%, and on the
Fourth year.
it will go up to 6%, which is the original rate that they were quoted at. And I believe there's another option also. Instead of a 3-2-1, there's a 2-1 buy down option. So yeah, these are great strategic options to get these buyers into properties.
Yeah.
So
Now, also, I'm assuming that the 2-1 loan is actually will be less expensive to buy than the 3-2-1 loan, because this is a buy down loan, so you do have to buy this through your purchase. Now, also, what I've been hearing some people tell me, like, hey, you know what, the seller. Mandatory for the seller to pay for this buy down. Is that correct? Is that
no, that's not correct. Buyers can pay through concessions, through some closing cost. They could, and it'll be to their benefit also to get their property sold quick, because nowadays properties are staying on the market for a little longer. So, it's to their benefit to help the buyer.
Right.
So, but also the buyer can pay for this buy down, and also it could be paid by, like let's say an employer, for example, if the buyer is wanting to relocate, so it'll be to the benefit of the of the employer to help. So there's ways to get that fee paid. So yeah.
So even like a gift,
Like a gift.
So a gift from the
Also.
employer, the uncle, the dad, the brother, the sister. Yeah,
Definitely.
Yeah, I mean, and as I can see, the demand for housing is still very strong. It's still high. There's still a high demand. Sellers are still selling, buyers are still buying, and I think one of the key factors to that is that we're looking at an unemployment that's it's been the lowest in the last few years, and I think that's one of the things, or that's one of the main things that drives people to buy, is that, hey, if you have a job, you can buy a house.
Yeah, they
Right?
they have a stable job, they can buy a house.
Yes.
That's the only way to qualify.
Yeah, so if you have a job, you can buy a house, guys. Stop paying rent. Like Victoria says, what?
Don't pay your landlord's mortgage and start paying your own.
Yeah, so we're gonna end it with that. But if you guys are looking to get pre-qualified, if you guys want to know what is your buying power, let us know. Give us a call. We'll schedule an appointment with you. We'll let you know what documents we're gonna have you bring in, and one of our great loan officers will help you get pre-qualified. Also, they'll give you a breakdown on these 3-2-1 loans and these 2-1
right.
buy down loans. We call them buy down loans. And we'll also give you options on the ARM, the adjustable rate loans, because sometimes that might be the best option for you guys, not necessarily the 30-year fix. So we just need to sit down with you and go over all your financial situation and see where you are financially, physically, and then emotionally especially, and then see which is the best product for you. And then once we establish that, we're gonna have one of our amazing agents show you some properties and get you guys into a home that you guys deserve.
Absolutely.
Yeah.
Yeah. Together we can sit down and find out what your comfortable payment is and what you qualify for, and all the options that you are going to have.
Yeah.
So let's sit down. Give us a call. My phone number is 626-715-6324, and yours.
And my number is 626-290-6900. Or you can call our office at 626-587-0004. Anyone that answers the phone can help you. We can schedule an appointment with you again, send you an email of what the documents we're going to need, and let's get you guys into a home. These products are not bad products. They're out there because this is just the time and the term for these products. We had the negative AMs that had their little season. We had the 30-year fix. We had the FHA. Each product has their season, and I think right now these buy downs are going to be what's going to help buyers get into their dream home, because remember, you could always refinance later, right? What do you say, like 1-2 years?
Definitely. After 1 or 2 years, borrowers are always refinancing. So, whenever the rate goes down, we'll help you refinance. We'll let you know what your options are, and we'll get you, at a lower rate. So we're definitely here to help you.
Yes,
y hablamos español también.
Hablamos español, yeah. So give us a call, okay? Anytime, we're always here. All right, guys.
Take care. See you next time.
Bye. This has been another segment of Stop Whining About Real Estate.
Stop whining about real estate.